Welcome back to Business Today. You'll be joining me for the latter half of the show. Today we are actually looking at a very interesting market segment for our market discussion. Today we are looking at the fuel pricing formulas and the fuel pricing sector. Now, there's been a lot of talk about the Ceylon Petrol Corporation and the Lanka IOC having the price difference between them and the fuel pricing formula that is incurring losses for the Ceylon Petrol Corporation. So we thought we'll bring an industry insider to talk about it. Today we are joined by Nirukthi Kariyawasam. She is the product lead at Frontier Research. So welcome to the show, Nirukthi.
Hello. Okay, so thank you for inviting me to the show.
All right, Nirukthi, looking at the fuel pricing formula, now that's a very different term. What does that exactly mean?
So basically, a fuel pricing formula is a cost-reflective, transparent formula where you find the different cost components that make up the price clearly indicated. Unlike right now, how the prices are indicated in a very ad hoc manner, a fuel pricing formula would automatically adjust for the required cost changes in the market.
What are the variables that go into those formulas?
So generally, a fuel price formula would have the import cost and the production cost and the subsidies, taxes, and also the profit margins for the oil producers and also the distribution companies.
Okay, so what are the pros and cons of this formula?
So I think one thing that people would see at the outset is that an automatic fuel pricing formula that would require a regular revision to bring in inflationary impact. That is, when the prices are revised on a very regular basis, it would increase the prices. And especially considering that fuel is an essential commodity, this would have widespread impact. That is, it will not just have a direct impact on inflation or prices, but it will increase transport costs in utilities and even food items. But what must be understood is that when this happens, when a price increase happens, the impact on inflation is very momentary. But when the prices are kept stable for a long period of time, then that creates long-term macroeconomic instabilities or imbalances. For example, when prices are kept constant, the people do not feel the changes in the global market, the price changes in the global market, and the demand does not change accordingly. What happens invariably is that the import volume increases, and automatically that creates BOP or balance of payment imbalances.
Okay, so you did actually mention the global impact. Now, can you go over the global fuel pricing changes over the past few years, just briefly?
Yes, so the prices have been on a rapid rise since the last year. Mm-hmm. So what we've seen is since 2015, where the prices were at $30 a barrel, now it is reaching nearly $70 a barrel. So that's a more than twofold increase.
Yeah.
And in the meantime, Sri Lankan prices have remained constant since 2015.
Yeah, and if we do look at a price change, when roughly how much of an increase would we be looking at with the new fuel pricing formula?
So according to CPC, currently the cost is around 137 per litre. Mm-hmm. But a petrol right now is administered at a price of 117. So that's nearly 20 rupees increase. Of course, this cannot be introduced immediately. It will need to be introduced on a step-by-step basis. But that's the kind of loss that they're looking at.
That's the CPC. Yes. What about the LIOC?
They're also actually seeing a similar kind of a loss at the moment. But currently, since they've been forced to increase their prices because of the losses that they're making, probably the loss is a little less. Still, if you look at the overall market, the market share for LIOC, it's nearly 20%. So definitely a price increase means that they are going to take a hit on their revenue as well.
All right. Now looking at LIOC, they did actually increase their prices a little bit. CPC is at the current level since 2015, like you mentioned. What kind of losses is CPC looking at right now, monetarily?
So according to a recent statement they made, it's around 40 million a day. So that's around 14,000 billion per year. So just to put things into perspective, that's around 0.7% of government tax revenue. That's how huge their loss is.
So that's the hole that we are covering up with, sometimes with taxes and stuff.
That's true.
So can you give us some examples of fuel pricing formula working on other countries?
So there are lots of countries that are undertaking a fuel pricing formula. In South Asia itself, there is Malaysia, Indonesia, Philippines, and even Nepal. But looking at each of these countries, they administer it very differently. I think the best example we can look at is Philippines, where they implement these revisions by an independent board, that is an Energy Regulation Commission. And that is basically the whole idea is that they make the revisions according to the changes in the global prices rather than any ad hoc changes as required by the political parties or even the leaders.
All right. Now, why does the government look for an automatic fuel pricing formula or a fuel pricing formula?
So, like I said, CPC is currently they are undergoing a huge loss. But I think the main reason why they are looking at a fuel pricing formula at the moment is considering the macroeconomic conditions, that is that the BOP balance is not at a very good level. Right now, we have achieved 2 billion surplus last year, that is 2017. But if you look at the fuel import bill, that's a 28% increase in 2017 alone. So that is basically a 1 billion increase from 2016. And if you look at trade deficit, coincidentally, that is also a gap of 1 billion. So all of this basically comes in because of the recommendation by the IMF. That is, the IMF has a target that Sri Lanka needs to achieve, and that's supposed to be achieved by end March. However, we are past that deadline, and the government is now in discussions with the IMF, to come up with some workaround arrangement.
What is the International Monetary Fund's involvement with the government, actually?
So the government went in for an external fund facility, a loan of 1.5 billion. That was in late 2016. And right now we are at the phase of receiving the 5th tranche. So this implementing or obtaining the cabinet approval for the automatic fuel pricing mechanism was one of the targets that they had to receive before this 5th tranche.
Yeah. Why? Now, looking at the fuel pricing formula, is that taking into account profits or is it as a break-even margin?
So currently, considering the loss, I think what they can look for is to go for a break-even margin. And if you look at the global prices, like I said, they are on a continuous rise, and global analysts expect this to continue. So probably they will have to just look at a break-even cost rather than going for a profit.
All right. Now, government has an import tariff on fuel. What does that actually mean?
So generally what happens is the government taxes a CPC or LIOC when the fuel is imported. And right now, considering all the requests and urges by the CPC, the government did go for a reduction in the tax. And well, of course, what they can do is currently, and what they're trying to do is to reduce the taxes, but then that is only a temporary solution. And because it is, like I said, the prices are going to increase, they will need to come up with a more permanent solution in order to tackle this problem.
All right. Now, looking at the fuel pricing, the CPC, and now I see there's a price difference. We are aware of that. We did actually discuss about it. Now, what difference does Lanka IOC expect from the government? What do they need to break even or to generate profit?
Of course, being a private company, they would require a profit margin. But like I said, currently where we are at, we are at loss-making stage, CPC and LIOC both. So definitely they will also want a place where they can make a break-even margin. But more than that, what they would require is stability and make sure that they will not have to incur losses on behalf of the government.
Yeah, so does the government have an agreement with them to reimburse them in some manner, or is it just a regular pricing formula where they're regulated on the prices itself, just it?
So generally the subsidy cost, that is the subsidy that the LIOC as well as CPC needs to bear, needs to be reimbursed by the government. But the problem is that does not happen very regularly. So now the companies will have to bear this cost on behalf of the government. And what this finally translates into is debt. That is debt taken by CPC and LIOC in order to fund these losses. So basically what you'd see is that the debt that is supposed to fund the government expenditures are now in the books of CPC and LIOC, making them quasi-fiscal agents. Basically, they are acting on behalf of the government in order to provide a subsidy.
All right, now you did mention about the government incurring losses. So how does that translate into the local businesses? And
Sorry.
Yeah, local businesses in terms of taxes being increased. And looking at also the fuel pricing formula. Now, the fuel price increase, you did actually go over it a little bit briefly, how that would impact local businesses. Can you expand on that and what the difference would be if we continue along this path where we continue to increase the governmental debt?
So what happens when the government incurs losses is definitely this needs to be funded in some way or the other. One way is to either borrow, which is currently the government is facing colossal borrowing, a debt repayment coming in 2019 and 2020 as well. So the other way of funding it is generally the increase in taxes. So what the consumers will feel is an increase in taxes in order to fund a subsidy towards them. And what happens when a revision happens is, like I said, there will be a small inflationary impact, but at least there would be stability in the long run.
So how does, now for a normal consumer, normal citizen, what is the downside of continuing on this path? You didn't mention the taxes. Is it more beneficial to have a fuel pricing formula or to go into continue along this path where the CPC and the IOC are incurring debt, the government is incurring debt? Which is more beneficial to the normal consumer, not the companies itself. Companies would have a different opinion, but...
Yes, in the short term, definitely having a stable prices are beneficial because your price is not going to change. But if you look at in the long term, what happens is, like I mentioned, prices have not changed since 2015. And in an environment as such, what happens is these artificial prices will boost a demand that should not have happened. And accordingly, the volumes increase. So this actually increases, apart from the macroeconomic imbalances, what happens is when it comes to a point when the government can no longer bear these subsidy costs, they will have to go for a revision. And this revision is probably not going to be step by step. It might be a huge hike, in which case the pain is going to be more on the consumers, because at that point they would have already gotten used to a higher consumption pattern.
Yeah. Do you have any idea what the pricing increase would look like? Or don't you?
Currently, we are not really sure exactly how they are going to go about it.
Yeah.
But in 2002, we actually practiced a pricing formula.
Okay.
At that time, what they looked at was a 5% profit for the distribution companies and oil companies. But that was like way back in 2002,
yeah.
When the prices were the oil prices were somewhere around $15 a barrel.
$15 a barrel.
$15 a barrel. So at that time, the prices in Sri Lanka, the petrol prices were somewhere around 50 rupees.
So was there a drastic increase in prices, or was it just a small increase with that fuel pricing formula?
Yes. So what happened in 2002 was they could have increased, they could have done revisions. They did revisions on a monthly basis, but they were not done sufficiently. Oh. So when it came to that point when the oil prices started increasing drastically in the global market, that basically meant that the government had to either increase the subsidy or is go for higher revisions. So basically the formula itself became of no use.
All right. Thank you, Nirukthi, and that was very informative.